All right, so today, as you know, we are going to focus on trade plan and stop losses. Absolutely key to successful trading. Plan your trades and trade your plan. What I found over time, I spent tens of thousands of pounds traveling around the world for well over a decade. What I found was trading, if you can get it in a business-like manner, we're talking about planning, we're talking about mechanical, objective decision making, we're talking about non-emotional ways of doing things. And one of the things I like to do is just use a checklist. Do we have momentum in play, pattern, price, and time? If yes, we place the trade, and we just need to know where is a logical place to place our stop loss. So let me share my screen, and I'm going to share my trade plan. Now, those that are in the crypto gym, you should have access to this. I would highly recommend that you read it. So we're not going to read the whole thing today, but the way I've written it out is really for you to get a nice strong feel on what we're looking for. We're looking initially for a double time frame momentum. This just massively stacks the odds in our favor before even considering a trade. Now, by itself, it's not a standalone trade strategy, but it can make a significant difference on when to stay out of the market and when to be in the market and which direction. And really, you want to identify your rules. And it's okay to have a different trade plan to myself, because I like to trade on weekly, daily, and then ideally enter on an hourly chart. But sometimes a daily is against the weekly, so then I'm looking at a daily and then an hourly chart. Others are more day traders, scalpers, looking at hourly, 15-minute, 5-minute. Some even go as low as 1-minute charts. That can be pretty good, but it requires a lot of time and a lot of stress, and you have to be a lot more active and a lot more well-versed and well-skilled, which I am, but it's the time factor. So I prefer just to look at the larger degree trends. Part 2 of the trade plan, again, I'm going to allow you to kind of really read through this. You can download it. I actually reposted it in the BNB workout this morning because it was relevant with what we're looking at with BNB, with the short trade, is Elliott wave patterns. Is there a clear Elliott wave pattern? And ideally, more often than not, what we're looking for is an ABC correction. It's a simple ABC correction, whether it's a ABC of a wave 2, an ABC of a wave 4, an ABC of a trend unfolding, and it's just a pullback on a intermediate or micro wave count. So by the way, so double time frame momentum and Elliott wave, that's going to stack the odds in your favor. By the way, I should have checked just to make sure you can all hear me. Pop your hand up just in case I'm talking to myself right now, making sure you can all hear me. Yes, you can. Fabulous. Sometimes you don't know, right? It's like talking into a mirror sometimes. So having Elliott wave pattern, especially if it's on 2 degrees of counts. And what I mean by 2 degrees of counts, it's really in fact, let me just change my screen to this for a second. When you're thinking about Elliott wave, what we're looking for is something like this, move up, and then this is for long trades, ABC correction. But this part of the market, this wave C, often will break down to a 5-wave sequence. And if it does, the market going above this high is a strong indication. So double time frame momentum and Elliott wave on 2 degrees is a really, really powerful strategy. But now let's just keep going with Fibonacci price. Now, if you've been watching my stuff for a while, if you've done the Elliott wave course, the Fibonacci price course, you'll know that wave 2s, wave 3s have a relationship with each other. Wave A's and wave C's have a relationship with each other. Wave B's and wave C's also have a relationship. So if you can get those relationships and really learn those, then all of a sudden you have a nice high probability setup. One of the most common, as you see me do time and time again, is just a simple retracement. And this is going to come into stop losses to really understand, because what we're really looking to do is understand buying and selling behavior, and then long the market, short the market at the high probability points where we can become the casino and trade consistently. So when you see the market moving up and then it does a pullback between 50% and 78.6%, combined with pattern and momentum, especially a double time frame momentum and 2 degrees of wave counts, all of a sudden you have a very high probability trade on your hand. And then you want to be able to action that information in a logical, mechanical, consistent manner without getting emotional. Because if you don't have a clear trade plan, which is objective, then it's inconsistent, and people are too caught up in the performance of the last trade and not looking at this trade as an independent event. And it is an independent event, which is really, really important to success. So that's the Fibonacci price. Obviously, we've got more than the retracement, alternate price projections, external retracement. Ideally, what you want is a cluster retracements, alternate price projections, and external retracements. So I cover this in a lot of detail here in the trade plan in terms of exactly what we're looking for and why. And it's really the wave C's, right? In fact, let me just show you this. I think this will be helpful for you because this is what we're looking for. So when we're looking at this price behavior, let me just change the color here, is wave C's, which is this wave here, often is the same length as wave A. So that's the alternate price projection, and we can measure that in advance. Wave C also, this wave again, is a particular ratio more often than not of wave B. It is 1.618, so you'll get another cluster in that range. And then you've got the retracement, which we spoke about already. And then if wave C is breaking down to a nice 1, 2, 3, 4, and it looks like a 5, well, actually, you can also measure this wave 1 to 3 relationship. There's particular ratios. I cover this in the course in more depth. And then also this wave 4 has a relationship to wave 5. So when you get a nice tight cluster, all of a sudden you have a very high probability trade set up on your hands, and you want to be able to action that in a non-emotional, consistent manner. That's going to be the absolute key to what we're looking for. And then last but not least is Fibonacci time. This is often the missing piece to most people's trade plans because most people just have no idea it exists. And it was W.D. Gann, I say it here in the actual trade plan, who did a lot of work on time. And I like to use, I call it the Rubik's Cube philosophy. You know, the Rubik's Cube, I've got one over there somewhere. It's the world's most impossible puzzle. If you want me to do it in front of you, you can do it in like less than 2 minutes. I can do it towards the end if you want to check it out. But the methodology is, it's regarded as the world's most impossible puzzle, but mainly because people don't know the method behind the madness. So it looks like magic. You know, Arthur C. Clarke said it nicely. Any advanced science is indistinguishable from magic. And often these things look like magic, like you got a crystal ball, but you haven't. It's just a methodology of buying and selling behavior, keeping things really, really simple and consistent. And this is our 4-part edge. Double time frame momentum, 2 degrees of Elliott wave counts, 2 or 3 degrees of Fibonacci ratios, and 2 or 3 degrees of Fibonacci time. And when we've got that edge in our favor, then we want to know how to trade that edge. So what I'm going to do, I covered this in a lot of detail. Again, I highly encourage that you read it because it will take your trading to the next level. But what I'm going to do is read some of the executive summary. So what I do here in the trade plan is at the end, page 10, is I just summarize everything. So this is what we're going to do and go over this in a bit of detail. The relevant parts when it comes to entry, initial stop loss, and then I'm going to do an example with Bitcoin stop loss management. How do you adjust your stop loss as the market is unfolding? So what I write here is we identify the facts of the technical position using momentum, pattern, price, and time. We report what this should mean, what it should mean for the current technical position and outcome. We then look for high probability setups, which is an edge, and entry strategy. We trade the edge without hesitation or reservation in a confident, fearless manner. Now it's important, some people do affirmations, which is trying to kind of program the mind how to think, because we operate 95% unconsciously as human beings. But we know that or not, it's been trial tested, proven from the Freudian days, from neuroscience, from Yale University and beyond, we operate 95% unconsciously. So these things, these sayings, high probability, be the casino, trade the edge without hesitation or reservation in a confident, fearless manner, are affirmations. And you want to drill them into your mind and repeat them in your mind. So when you see the trade, you remind yourself just to act. And then it says here, but without being reckless. And what that just simply means, what we're going to talk about today, is having a stop loss. If you don't have a stop loss, you're insinuating that you know what the market's going to do. And you expose yourself to an incredible amount of risk. And 1 or 2 trades that go massively against you can wipe out your whole account. So your stop loss is your insurance position. And we never risk more than 3%. I like 2%. 2% is a nice, healthy number. If you've got a very, very large account, then 1%. If you've got a very, very small account, 3% is an aggressive amount. If you wanted to go higher, then 5% will be the absolute high. But 3% is regarded as quite aggressive because you can get tight stop losses. And if the market goes in your favor, you get like a 15, 20 times multiple in risk reward. 15 times 3 is 45% of your whole account size in one trade. So we always trade in the direction of the higher degree time frame momentum and pattern. So sometimes the higher degree pattern or the wave or the momentum is on the weekly chart, and other times it's on the daily chart. And you want to be aware when the daily is against the weekly and when it's with the weekly, because the trade expectations may be different in two circumstances. But again, just so you're clear on the same page, this is a business plan. And you want to plan your trades and then trade your plan. And if it's not in your plan and you do something that's not in your plan, then you're breaking the rules and it's not going to allow you to be consistent. So your job is to become the casino and trade with a consistent edge. So again, we risk no more than 3%, 2% I like. We enter in 2 units. This sometimes confuses people. We actually buy one position, which represents 2%, and half of that position we count as unit 1, which is our insurance, and the other half is unit 2, which is our profit. And what I mean by that is corrections and impulsive waves, the initial parts actually look the same. Trading the markets is a business. And if you want to make money in the business of trading, you need to have a plan. And if you fail to plan, you should plan to fail. So you need to develop a trade plan. To help you on your journey, I've shared my personal trade plan in the link below. It covers the 4 elements of the markets: momentum, pattern, price, and time. But more than that, objective entry strategies with a checklist, which keeps it mechanical and objective and non-emotional. Take these key ingredients that I've learned over the last 15 years, adapt it so it suits you, and then take your trading to the next level. And more often than not, other than the momentum indicating what's likely to occur, we don't know if it's going to occur. So we need to have that in mind when we're thinking on unit 1 and unit 2 thinking. So I'll write that over here. I'll say unit 1, we assume we are wrong and take an early logical profit on the same degree wave count that we entered. Unit 2, we assume we're right, that the trend is going to unfold beyond just a simple ABC style correction, and we want to have our stop loss in a logical position that shouldn't get stopped out if the trend is to unfold. Now, once you have your setup in play, it's actually quite mechanical, quite obvious. There's not much thinking to be done once your edge is met. But when you're managing your trade, there is some thinking to be done depending on how the trade unfolds. We have to take the momentum into consideration, the pattern, how it unfolds into consideration, and Fibonacci price and Fibonacci time into consideration. And there's a bit more judgment, and that comes with experience. So again, we write here, which is really, really important. We adjust based on Elliott wave, what the market should not do. So one of the Elliott wave rules that you should be familiar with now is that wave 4 should not trade into the closing range of wave 1. So if we see a market looking like it's a wave 3 unfolded, well then if there's any correction of a wave 4, it should not pull back into the range of wave 1. So let me just draw that out just so we're clear on the same page, because this comes into stop loss when we're thinking about stop losses. So let me just get this up here. All right, I'm gonna just go to a new page. So what I mean by this, let's just think about the short side. By the way, when I do this, when you see this, the reverse is true for a bear market and bull market. So when we're saying this up here moving up, ABC, often you'll see the reverse move down and ABC. So we want to know what degree, what direction we're looking to trade. So when I'm saying Elliott wave rules to adjust your stop loss, let's just say for some reason the market was moving like this and it did this, and for whatever reason, momentum, pattern, price, and time, we thought this was the end of a trend. Let's say it was the end of a wave C on the way up, and we anticipate that the market's going to move down. So we want to short the market on this swing low. And let's just say the market moves in our direction like this, does this, and then does this. Okay, for unit 2 thinking, we don't know if the trend is going to continue to unfold at this stage. But what should the market not do if it does unfold? Like if this is going to continue to the downside towards a wave 3, what is something that it should not do? Well, knowing the 3 Elliott wave rules, that wave 4s should not trade into the range of wave 1, which is this range over here. We know if the trend is to continue to the downside, it should not. I'm not saying it won't, but it should not trade into this range over here. So where is a logical place to put your stop loss at this stage? Well, is at just above this close over here. So if it does close into this range, we go, okay, we want to be out of the market. Something else seems to be happening. The psychology is different. Let's just stand back, get stopped out with a small profit, break even, or a small loss, and then reevaluate. So this is just the reality of trading. All right, so let's go back to the trade plan. So now just to go over here, higher time frame, extreme momentum. So we're going to look at the extreme momentum, pattern, and price. So stop loss, let me just make sure I'm highlighting this so you can see what I'm reading over here. Stop loss placed just beyond the reversal extreme. So we're going to go into a live example, well, not a live example, backtrack to Bitcoin. We're going to look at Bitcoin in a second. So the point that would void the Elliott wave count, right? So you want to ask yourself the question, what should the market not do if this is a correct count, if it's going to unfold? And we don't want to be in the market if it does the opposite, right? That's really, really important. Now, a big challenge if you're brand new to trading, or if you've been trading less than 3 months or 1 month or so on and so forth, if you're not experienced, is people take it too personally about getting stopped out. They see it as a personal thing. They feel stupid. They feel like they got it wrong, etc., which is actually natural, believe it or not. That's why most people fail at the business of trading, because they take it too personally. They get emotional with it. So the business plan is to help you to get more objective, more mechanical, more consistent, right? So it's to know the stop loss is there to protect you. It's not about getting stopped out and losing 2%. It's about getting stopped out and protecting the other 98%, right? So you flip your mindset. Really, really important. You get your mantras in, you get your affirmations in, get the thinking right, because most people think wrong when it comes to trading. I hear it all the time, even within our own community, where people are looking at the market moving, and if it gets stopped out, it's just literally you're at the casino, you get the edge in your favor, and then you place a large sample of bets, or you allow people to place bets against you. You know you're ultimately going to win because you got the edge in your favor. The tough part is trading consistently, right? That's going to be the tough part for most people. So pattern price, I just wrote a note here. Pattern and price takes precedence over momentum. Sometimes the momentum positions are not perfect. The market's almost nothing. And sometimes the pattern's really clear, the price is really clear, even the time might be clear, but we haven't got the next bearish momentum reversal. So sometimes you have to make an executive decision. We saw that the other day, was it with Bitcoin or with Solana, one of the two, and it did unfold as anticipated. I've got a few other notes here as well, which I'll recommend reading. I'll cover a few of the other bits. You know, when the edge is not clear, 100% clear, we can wait for a pattern reversal signal. There's a few other bits and pieces. And then what we're going to look at today, I'm not going to read the rest of this over here, is the checklist. I've created a checklist to really help you and not miss anything. You know, I don't know if you know this, but in the early 1900s, aviation, right, especially in the military, 25% of all military aircrafts used to crash, right? You had a 25% chance of crashing and dying if you were in the military on flying airplanes. But they've used the system since, right? And especially with commercial flight, of thorough checklists that make sure nothing is missed. And if something does happen, they put in a new checklist to make sure that that mistake or error doesn't occur again, or it minimizes. Trading is no different. We want to look at this and go, okay, we want to make sure the momentum is in play before taking the trade. And keep in mind that we operate 95% unconsciously. So if you haven't got a process of trading consistently, you're more than likely going to make mistakes. Even if you're really well versed, you want to have some type of checklist in play. So we want to look at this. We'll look at this as the weekly checklist. So momentum checklist. Let me just zoom out a bit. I actually did this in the BNB workout this morning. Just kind of emphasize and making it easier. And the way you'll do this is like literally a flight checklist. You go, okay, what's the weekly momentum? Okay, it's bearish but not oversold. What's the daily momentum? It's bearish and not oversold. Okay, we can go, okay, we can now consider a trade. Other times you may find that it's bullish. So the momentum might be bullish and you go, well, actually, I only trade in the direction when weekly and daily is in our direction. So you want to have your clearly defined rules ahead of time. And then I like to, my ideal setup is weekly, daily are in line, and then drop down to a 60-minute for a tight entry. That's not always the case. It's not always there, but that's what I look for. Pattern, ABC zigzags is what we're looking for. That's the most common. Second most common is an ABCDE. Is a complex correction, but it's quite easily to identify in advance. And then there's other types of corrections. And then pattern reversal signal. You would have seen me talk about this a lot recently. It's one, it can be your entry point, your pattern reversal signal. But sometimes you are not sure about the market. You want to wait for the pattern reversal signal and then wait for the first pullback. And this is just to help identify, has a wave 4 of a wave C been exceeded? Is there a wave A overlap? That gives us a strong indication that the top is going to hold. And the stronger out of all of them is actually the wave B being exceeded. So in other words, the market moves up. We got this ABC, and this is the wave B up here to A, B, C. And if it's exceeded like this, that's a strong indication that the market's going to continue to the upside, and this low down here will hold. Doesn't mean it's going to hold, it's just highly probable. Then we look for pattern, price, the retracements, external retracements, alternate price projections, and then time, some of the key time ratios, and then also the entry. What entry strategy are you going to use and on what time frame? Sometimes it's more appropriate to enter on a daily chart that has pros and cons, and then other times it's more appropriate to enter on a 1 hour chart, and it also depends on you, your time availability, your skill level, and your risk tolerance, and your strategy. Because even if we're using momentum, pattern, price, and time, two individuals can actually have two different trade plans. One may be looking for longer term swings, and others are looking at hourly, 15-minute, and 5-minute. Same principles apply, but it might be different. And then the type of entry. The two most common is a 1 bar high or low, and swing highs and swing lows. I just want to make sure you can see Bitcoin. Give me 2 seconds. Yeah, you should be able to see my chart. What I've done, I've just taken the data back to the 19th of July, right? 19th of July. And Bitcoin, we've had the market move down, and it looks like it's overlapping, right? Remember, what we're talking about today, it's really going to be two things: stop loss placement, initial stop loss in particular, because sometimes people, you might not be used to, where do I put my stop loss? And should I have a stop loss? Some people don't have a stop loss. And I go, if you haven't got a stop loss, then it just falls into the bracket of gambling because you're exposing yourself to too much risk. What I've done over here is, you see this red box at the top of the daily momentum over here? This is the weekly momentum, and I'll show you actually. Let me just show you to make it a bit simpler. I'm just going to click on the weekly chart. What I've done is the weekly momentum at this point is overbought. And when the weekly momentum is overbought, on the next daily bearish reversal, you can consider short trades for the momentum on the weekly and the daily to be in line with each other, right? The higher degree time frame can be overbought. Next bearish reversal on the daily, look for short trade setups, and then you're looking for pattern, price, and time. It doesn't mean just because the momentum line up that we take the trade. It means it's just the minimum criteria to stack the odds in our favor. Very, very important. All right, so we got minimum criteria, and then we'll look at, I'm not going to get into too much detail with pattern and price, but we'll just look at, okay, it looks like potentially an ABC style correction. We can consider a short trade on the next bearish reversal. I'm just going to talk about this now, because I really want to focus on stop loss placement. That's going to be the main focus of today, because trading is actually simple but not easy, right? Because there's a few elements, like driving a car. It's not just pressing the accelerator. You've got the steering wheel, you got the mirrors, you got the windows, you got the gear stick, you got many moving parts. So once you have to get used to the moving parts. So what we're going to do here is we're going to wait for, let me just make this a bit lighter actually. Sorry, I'm just going to make this a bit lighter so it's easier to see the blue and the red line. All right, what we're going to do is we're going to wait for the next daily bearish reversal. On this example, we're going to say we're only taking trades on the daily chart for today for placing stop losses, and the weekly momentum's overbought. On the next daily bearish reversal, pattern and price are in play, we'll consider a short trade. So we're going to wait. So I'm just going to unfold the data 1 bar at a time. I'm just going to look at the momentum. So it's another day, and bang. So now you can see that the blue line is below the red. That's what we call a daily bearish reversal, which is in line. And what this tells us, or indicates, is an indicator. It indicates to us, now that is in line with the weekly momentum, which is not bearish, it's oversold, which indicates that it's possibly at a top, a weekly top, is that this could be a top lasting for a few days, but maybe even a few weeks. So we can consider a short trade setup. Once this condition is met, and we're just going to assume some of the other conditions are met as well. What I'm going to emphasize here is a couple of things. We will talk a little bit about pattern and price in a bit more depth. I've done this retracement, which is 50%. The price has not tagged the 50%, but it's close, right? So you have to decide if this is a trade that you'll still take, knowing that it hasn't tagged, it's close. So it might not be perfect, but the double time for momentum, a move up, a move down, and a move up looks like an ABC, good enough to consider a trade setup. So how do we take a trade? Well, we want to have an entry strategy that allows the market to move in our direction that triggers us. So it just increases the probability, the market moving in our direction. So we're shorting the market. So remember, if I bring up the trade plan again, if we look at this part down here, where I say 1BH, BH stands for bar high or bar low, 1 bar high or 1 bar low. So that is the strategy, right? So we go back to Bitcoin over here. What we do on your trading platform, whatever you're using, is you put in your order on the 1 bar low. For Bitcoin, I actually like to put it at $5 below. So whatever the low is, I'll make it $5 because I really want it to move in my direction, which massively increases the odds. Now, one of the advantages of trading on a daily chart is that you only get 1 new bar a day, right? 1 new bar a day, which means you can pretty much just look at the chart once a day. You don't need to take any other action. It's just 1 bar a day. The downside is you won't get the tightest of entries, so you have a bigger distance for your stop loss. It will still represent 2%, but it's a bigger distance. So you can kind of have that in your trade plan, knowing what time. If you have a full-time job and you start at 8 a.m. and you finish at 6 p.m., and you can't look at the charts in between that time, then this will be a strategy that you will probably look at. Now, if we get triggered into the trade, if we place the order, we want the stop loss to be above the swing high on this time frame. Right, so this will be our entry. If we get triggered into the trade, this will be our entry, and our stop loss will be, I like to do on Bitcoin, $5 above the high. So again, I'm not sure how well versed you are in looking at charts. What you'll see over here is this O, this H, this L, and this C. What this actually stands for is the O stands for open, H stands for high, the L stands for low, and the C stands for close. So this bar on the left here, this part here is the open, this here is the high, this here is the low, and this dash on the right hand side is actually the close. So when I hover over the bar, what we're going to look at is the H. Let me just make sure that's emphasized, is the high. Now hover over the bar, and the number that you should see is 23,434.65. Also note, just letting you know this, you may have noticed this yourself, depending on what trading platform you're using, it might be a slightly different price than what you see in TradingView, and you want to take the price of the exchange that you're using. So if you're using Apollo X or PancakeSwap or Binance, you'll use that price because that's more relevant. So you use TradingView for your analysis, and you use the precise data on the platform. So this is this high. Oh, sorry, I want to go to the next one, which is this one here. I want to make sure you go to the right bar. So this is the one we want. So the stop loss would be $24,287. I like to plus 5, so it'll be 93, as in $24,293.13. And the order, if this was the exchange, would be the low, which is the L. So I'm just going to show you this. This is the nuances that you want to be aware of. This over here, the L. The low is 22,340.07. So I would put my order in at 22,335.07, right? So just $5 because I want the market to move in my direction. So sometimes you don't get triggered straight away. So you just unfold the data. Now we can see that the next day, the low is slightly higher. And we want to go on the last day's low. So the dark bar will open on the next day. We will literally just move our order. Now you need to adjust this. Now when you move your order, you can see that the distance between the entry and the stop loss is smaller now. Only by a fraction, but it's smaller, which means your 2% will probably become 1.8%. So you'll need to recalculate and replace the order and the position size. The position size, very, very important. So I know there's a lot of detail here, right? But we're getting into the nuances. If you're trading, these are the details that you have to take into consideration. And then bang, now we're entered into the trade. So we're triggered into the trade. So that was it. That was your initial stop loss and your entry. So what we're going to do now is we're just going to let the market unfold. So at this stage, is important to know. It's impossible to know what is going to happen, right? We have the edge in our favor, double time frame momentum, looks like an ABC. We didn't hit the 50% retracement. So unit one thinking, I'm going to do it this way. I won't show how much detail you want me to go into today. I will go into detail. Is when I go back to the trade plan and I just scroll back up to the executive summary and we look at unit one, right? We look at unit one. Let me just scroll over here. Unit one, we assume we are wrong and take an early logical profit on the same degree wave count that we entered on half of the position, right? So what does that mean in practicality, in practical terms? Well, we're on the daily chart, so the same time frame as the daily chart. So it's possible that we may only get a correction and then the market may continue. So that's unit one thinking. Unit two thinking is that this is the end of a correction up here, and the market is going to continue to the downside. And that's our unit two thinking. That's the paradox of trading. You have to have an insurance policy for unit one because it might not unfold. That's nothing to do with the quality of the decision that we made, because the quality of the decision that we made was at the point of now. And right now, we don't have any other information. We've done it perfectly. Everything we've done is perfect, independent of the outcome. There's another thing that what I've realized amateurs tend to do is they basically judge the trade on the outcome. Obviously, we're trading to make money, to make profit. We want to make profit. Absolutely. But sometimes the worst thing a trader can do is break all their rules and then the trend unfolds in their direction, because now they've got bad learnings and they're not going to be able to trade profitably consistently. What we wanted to do is have a methodology that we can trade consistently. Hopefully that made sense. So what I would do is I will do a retracement of this move up. So we got this move up. Let's do a retracement, right? We'll do a retracement. So we're just going to take this low to this high. Typical minimum is 50%. We want to be on high alert if it hits 50%. And we can also do a time retracement. All right, we've got the detailed analysis of this in the Fibonacci price course and the Fibonacci time course. So now people find this difficult, right? This is difficult. It is difficult because it's not normal thinking, right? We're thinking in terms of statistics here, probabilities here, casino thinking. We're removing how you've been taught to think. Here we're saying it's okay for the market to move against you, and if we get stopped out, we just reevaluate. So what we're saying here is unit one, we may just get a correction. So we want to be on high alert if the momentum, when the momentum is more of a when than an if, goes bullish. We want to see is a logical position to basically reduce our risk. Capital preservation is our first priority. Because if you preserve your capital, and when the trend unfolds, and there'll be times when it just unfolds, and we've seen that with some of the recent moves in Solana, BNB, and even Bitcoin recently, that's when you make your profits. But right now it's capital preservation. The classic Warren Buffett rule. Rule number one, never lose money. Rule number two, never forget rule number one. But in trading terms, this is the practical way of doing this. So now I'm just going to unfold the data. Okay, so now the market has moved in our direction, right? But at this stage, we don't know if the trend is going to unfold still. So there's two things that are going to occur, really, that you want to be prepared for. And at this stage, it's important to know, so important to know, that no one knows. I don't know, you don't know. All we know is double time frame momentum is bearish. Well, daily's bearish, weekly's overbought. At this stage, because think about it logically, right? Think about it logically. This looks like a move down, up, down. Okay, well, this could be an A, B, C as unit one thinking, or it could be a wave one, a wave two, and the beginnings of a wave three, and it's just going to continue to the downside and then up and then down again. That's unit two thinking. Yeah, which one is it? I go, we don't know. We have to plan for both. So what do we know right now is the daily momentum is now oversold, which indicates to us that a low is likely to be near. Is it going to just be a corrective low and then we get a continuation? Or is it going to be a low that holds and then the market moves to the upside? So this is the paradox. This is what most people find very difficult. It takes a bit of practice. You have to have two hats, right? We put a unit one hat on, is we go, okay, unit one, we assume that this is only an ABC correction. All right, well, we have to deal with unit one before we deal with unit two. So we get into our conservative mode, capital preservation mode. Now we go, okay, where's a logical place that we can move our unit one stop loss to? And can we get break even in a logical manner that's non-emotional, that we can repeat, rinse, repeat, time and time again, and measure the results? Well, the answer is yes. So let's do it. All right, so let's just, we know we might be at an ABC. Often, this is why you'll see me put in a question mark. Some people go, why'd you put in a question mark? You got a crystal ball, right? You know what's going to happen. I go, no. And we never want to be under that false illusion. So what do we do here? Well, sometimes it's better to drop down to a lower degree time frame to get a clearer picture of this. I'm just going to drop down to an hourly chart. I'm just doing this live as I would do it. And it's the same bit of data that we've got. And this is the information that we've got on the hourly time frame, right? We go, okay, this is a bit more helpful. So this is the green line and the red line is where we've entered and where our stop loss is. So what can we do in a logical, non-emotional way to say, okay, if we're wrong, let's lock in some profits. And can we get to a point where we're less than 2% risk exposed, or ideally break even, as in risk free? So if the trend goes against us, we break even. Or we can even maybe even in a logical manner get into a point where we're guaranteed a small profit. So unit one thinking first. So I'm going to draw a second red line, right? I wasn't actually planning on going into this much detail, but as I'm talking to you, it just makes sense to do so. On an hourly chart, it becomes much clearer, and you can use the momentum with this. It becomes much clearer to see these swing highs and lows, right? So you got a swing high over here. We got a swing high over here. We got a swing high over here. So unit one, there's no reason for us to have our stop loss any higher than this point over here. Why? Because unit one, we've got the unit one hat on. We're saying we're potentially at an ABC correction zone and the price is going to move up. That's it. So what do we do? How do we deal with this in a logical way? Well, your stop loss moves to this swing high. Right? It's logical, it's mechanical, easy. And then what we say is, on every bearish reversal on the 1 hour chart, or whatever momentum indicator you're using, sometimes it's better to use the 13 look back period, and sometimes it's the 8. And let's just stick with the 8 for now. And if it does another one and doesn't stop us out, we'll just keep trading the stop loss tight to the market. There's other times you might go to a 1 bar high, but right now we'll just keep it really, really simple as we can. But then also, before we unfold more data, we want to think about unit 2. So now we have to put on our unit 2 hat and go, okay, if the trend is unfolding, and in fact this is a wave 1, a wave 2, and this is the beginnings of a wave 3, it might be a 1. So let me just draw this out again. This might be a wave 1, a wave 2, and then this potentially might be a 1, 2, a potential beginning of a wave 3 for 5 of a wave 3, right? That's the hat you must put on, right? So we're almost doing two types of thinking: insurance, unit 1 thinking, and profit, unit 2 thinking. What should the market not do if this is a wave 3 unfolding to the downside? What should the market not do? Well, one of the rules of Elliott wave is it should not trade into the range of wave 1. So here we got wave 1. What we're saying is a potential wave 1. Looks like a clean wave 2 over here. And by the way, wave A's and wave 1 look the same. Wave 2s and wave B's look the same. So it's one of the reasons you'll see me write 1 or A. It's because I've got unit 1 and unit 2 hat on. And this is a 2 or B. So what should the price not do if the trend is to unfold? Well, it should not go into the closing range of wave A. So because that's quite close to our entry point, would it be logical to move our unit 2 to entry? Well, the answer is yes. So now we've managed our trade in a logical, non-emotional, objective manner without getting too caught up on anything. We've had plenty of time because the hourly chart, we've got plenty of time to do this, no rush. So what is the worst case scenario at this point? What is the beautiful point to be at? Which is we are guaranteed a profit. Nothing to write home about, I'm not going to change your life, but what's the profit? Well, it's this amount. Right, this is profit, it's guaranteed profit when you manage your trade like this. We move it into green. This is guaranteed profit. Right, so now if the market does this, we're not going to write home about this. We're not going to shout off the rooftops about this, but you should, because what you've done is you've managed your trade in such a way that even if you're wrong, you've made a small profit. How many times can you repeat that process? Well, it's infinite because you're not losing money. This is why I was actually featured in that book, High Probability Trading Strategies. If you read that chapter, I think it was chapter 8, he actually reads, in fact, I don't know if I've got it over there. He said something along the lines of, Jagir, this is back in 2007, right? When I was a 23, 24-year-old. Jagir sent me so many examples. This whole chapter could have been those alone. But the reason I'm using these examples, he showed me big winners, some losers, some this, that, and the other. He said more novice traders would have lost money in these trades, where Jagir made money. And it was because of this. It was the Japanese yen against the US dollar. But it was pretty much exactly this. So now we still don't know at this stage how this is going to unfold. Okay, we do because we're backtracking the data. But at the time of a live trade, we wouldn't know. We've just managed it in a very business-like manner. So important. So important. So now let's just unfold the data. Let's just see what happens. But hopefully that's making sense, because this is like the minutia, right? This is the detail of trading in a practical, logical, high probability fashion. Trading the markets is a business. And if you want to make money in the business of trading, you need to have a plan. And if you fail to plan, you should plan to fail. So you need to develop a trade plan. To help you on your journey, I've shared my personal trade plan in the link below. It covers the 4 elements of the markets: momentum, pattern, price, and time. But more than that, objective entry strategies with a checklist, which keeps it mechanical and objective and non-emotional. Take these key ingredients that I've learned over the last 15 years, adapt it so it suits you, and then take your trading to the next level. So now we can get rid of these now. Where we've reached the price, we're beyond the time zone of a correction. It's looking good in a certain way, because what we don't know, or I said this at the time, if you saw the workout, I said, okay, look, actually we were short on this market. And this is exactly what we did. I think we actually took this short. This part here overlaps into this range. So this, I said, look, it looks like a corrective nature, but sometimes it's a 1, 2 over 3, and it could continue, but we don't know that. So we just managed to trade like this. So now let's just let the trade unfold. Let's get the momentum back up. On every bearish reversal, if we don't get stopped out, we will manage the trade. So right now, if you look at this, I'm just going to zoom into this. The blue line goes below the red. So we go, right, next swing high, we just move the stop loss, right? Bearish reversals occurred. Where's the swing low? For unit 1, right? Unit 1. Do we need to take any action for unit 2? Well, let's have a look. What I would normally do is I want to be aware of a typical wave 3 zone. Right, I'm getting into real detail here today, right? Hopefully you're getting value from this. So normally what I'll do is I'll go, right, a typical wave 3, if I just do it from here, is 1.618. We want to be on high alert of 1.618 and 2.618. Right, so the price is actually coming towards the 1.618. So a wave, it looks like potentially a wave 1, potential wave 2, and a potential wave 3. So we want to be on high alert about this price target over here. And then we can also look at, well, what does this look like? Well, it looks like a 1, 2, 1, 2, 3. So we can be on high alert over here, so swing highs. So do we need to move our stop loss on unit 2 right now? Well, actually, I use the daily chart. I'll go back to the daily chart and I'll pull up the momentum and I'll go, no, I want the next bearish reversal on the daily chart because my trade expectations for unit 2, just so we're clear, is actually down here. So we don't want to tighten our stop loss too much. We just go, no, we're just going to keep it up here because my trade expectations is down here, right? So we go, no, we don't need to move unit 2 right now. It's not logical to do so. Just give it a lot of breathing space unless it tags this and there's a really clear 5-wave structure. So now let's just go back to the 1 hour chart. So I'm actually keeping it to the same time frame just so it lets me unfold the data like this. So now we've locked in a bit more profit, right? We've locked in this much profit now, guaranteed, right? No matter what happens, we're guaranteed a nice profit on this trade. Again, it's not nothing to write home about. It's around, like, what you risk is around 50% of that. So let's now just unfold the data. Let's get the momentum back up on the daily, sorry, on the hourly. We've made another bearish reversal. It's the same as the previous one. I'm just unfolding the data. I'm just going to zoom in a bit more and I'm going to wrap up because I want to have enough time to answer any questions that you might have. Well, we're just doing it very logical. Wait for the next bearish reversal. Bang, next bearish reversal. Well, it kind of went back up. We want the bar to close, so we'll just do one more bar. Right, we've got the bearish reversal over here. So then we just move it lower again. Right, it's not that much lower. It's literally just by a little amount. And we want to get stopped out with unit 1, by the way. We want to get stopped out. Sometimes you get stopped out and it moves massively in your direction. And other times you get stopped out and it moves against your direction. And either is okay. We don't have control. So here, we would have got stopped out of our unit 1. And then we look at, do we need to do anything with unit 2? Well, we could make a decision. We can look at this and go, okay, we've got these swing highs over here. It'll be logical to move our unit 2 to over here. It's practically where it is at the moment because the market should not go over this high if the trend is to continue. So we can go, okay, we can move our unit 2 to this high over here, which is a major swing high. So now we've locked in a bit of profit with our unit 2 as well. But again, we want to hold out for the larger degree trend. And what I mean by that is sometimes people lose scope of the bigger picture. What we're looking for is a big trend to the downside. And we don't want to, because sometimes you get stopped out and people get annoyed with themselves that they didn't take more profits. But that's okay, because when the trend unfolds, that's what you're going to make the big money, right? I'm not too fussed about these small amounts, losing 2%, gaining 2%, making 1%. That's just like capital preservation unit 1 thinking. But you need to give enough breathing space for it to grow. Like a fine wine, just let it mature and let the psychology play out. So now I'm just going to speed it up with unit 2. I'm going to now go back to the daily chart for unit 2, right? So unit 1, we got into detail because we approached what looked like a corrective pattern. And now I'm going to go back to a daily chart, go back to here. We're going to zoom out like this. We go, great. We've been stopped out for unit 1 with a good profit. We can now just delete this over here, keep it nice and clean. These are wave 3 targets. We've hit a target over here, but we're just going to give it lots of room, and then let the market unfold. Bang. Okay, stopped out. Right. Are we concerned with that? No, because it's taken out this high. Let me just go back to a 60-minute chart. Oh, I'm going into a lot of detail here, so hopefully you're kind of with me over here. Because it's massively gone back into this range, it smashed through this swing high. That just tells us, all right, the market is likely to continue to the upside, and this looks very bullish. So now you can either just wait for the next daily bearish reversal, or you can look for long trade setups. Long trade setups for against the weekly, but knowing that now that this looks corrective, we said this at the time, overlapping waves, we're probably going to see this high exceeded, and then we just look for the next short trade setup. I'm just going to go back to the daily, and that's the full trade, A to Z, stopped out, and we'll just, for the fun of it, we'll just let the data unfold. We'll just see what the market did. It did go onto a new high. we would have seen the same thing again, and it would have been the same process. We don't now know at this stage if this is the new high. And we're going to repeat the whole same process again, and the same thing happened. Like, it went to a new high, I believe. It went to a new high over here. All right, well, guess what? We do the same thing again. Why? Because we don't know which one of these is potentially going to be the high, if any. But we just go with the edge. Consistency, consistency, consistency. Now, this recent one, we know the market did a bearish reversal, would apply the exact same things, drop down to a 60-minute chart, look for a higher, sharper entry point. In fact, we did this on the workout in the crypto gym. If I just go back to here, what we did in the crypto gym, if I just unfold this data just very quickly over here, what we saw, if I can find the point, I don't know if I found the point. I know, I think I've gone point. It was this point over here. In the crypto gym, what we identified was the market moved down and it did this ABC correction. So this was a good shorting opportunity over here. And this time, it looks like, if we just go back to a daily chart, I know I'm talking a bit fast because I'm very aware of time. I think this is of value to you. Is this time it has unfolded. Unit 2 looks like it's unfolded. So unit 1, you might have been stopped out already, or you'll tighten your stop loss. But now the market looks like it's unfolding. And this is the reason for unit 2. Let me just clean this up. I'm just going to do this. The last thing to summarize is your initial stop loss would be here. Your entry point would have been somewhere here. Unit 1, you would have probably got stopped out probably around here somewhere. But unit 2, now that we've got a next daily bearish reversal like this, which we didn't get the previous time, your unit 2 stop loss would be up here. And every daily bearish reversal, you just keep doing the same. Whew, we covered a lot there. Guys, that was phenomenal. That was phenomenal detail. But that's the minutia, that's the detail of why you should have a trade plan. Now, coming to explain it takes a lot more time. But when you've got it on lockdown and you've got it down, we're talking about 5 to 15 minutes a day per coin process. And once you're in the trade, it should be logical, mechanical, objective, and you can just rinse and repeat that process. All right, let's just go into the Q&A. I'm very aware of time. Let's just have a look. I just want to look at the relevant questions to the stop losses first, and then we'll see if we've got enough time to do TA for any coins that you might want. So Herbert says here, with unit 1, can you confirm we actually use 50% or 100% retracement? With unit 1, can you confirm we actually use 50% or 100% retracement? You might have to confirm what you mean by that, Herbert. If you're talking about the position, you have your full position, 2% risk, let's just say, and then half of that position is what you use for unit 1 in terms of the position size. And then unit 1, I'm not sure what you mean by the retracement, but hopefully we may have covered it in the example that we did. If not, please do, just if you wouldn't mind, if you just make that question a bit clearer for me so I can make sure I'm on understanding what you're asking. All right, Sean has asked, how do you place an order, say a short, before the move happens? Will you need the charts to retrace up before the order gets triggered? Great question. So how do you place an order before the move? So that's a great question. And sometimes the conditions might not be in play. So it depends on your trade plan. So what we did today with the Bitcoin example, if we kept this simple, we just clean this up. Let me just clean this up. And let's just use this as an example over here. Let's just take the data back to this point here. Again, let's just use the daily. How do you place a trade before it starts to move? So the red line, remember at the top, what I've done there is now the weekly is now bearish. That's what it represents. On the next daily bearish reversal, we'll look to place an order on the daily chart, and I'll show you how. So we go, it hasn't gone bearish yet. Now, if you look at the blue, it's now below the red. So we go, okay, now our criteria is met. We've got pattern. We've got double time frame momentum. We go check. We've got pattern, which are just overlapping waves. We go check. 50% price retracement. There's some others as well, but 50% minimum price retracement. Check. There's some time ratios as well, high to highs and high to lows, etc., etc. Check. So we go, yes, trade plan met, checklist met. We can now place an order. How do we place an order? Well, at this moment in time, like listen, if this data was live, we don't know what's going to happen next. We just know what's highly probable. So now what we do, one of the entry strategies is at a 1 bar low. So you place your order on the low of the bar. You'll get it accurate on whatever the numbers are on your trading platform. And then the stop loss is on the swing high, which happens to be the same bar high. Then your order is now placed, but you're not in the trade. And then the next day, you might have got triggered and then stopped out, or you might have seen the high go up and then got triggered. So we can actually look at this on the 60-minute chart to see what would have happened over here. So you would have seen that the order, you would not have got stopped out on this one because the order was over here. The market went high over here, then triggered us in and then closed over here. So that's fine. So you would have got triggered into the trade without being stopped out. Other times you would have got stopped out and you just replaced the order. So that's how you do it. Hopefully I answered your question. And then you just manage your trade. Once you're in the trade, then it just goes into trade management. Right now, if you're trading on here, you would probably exit unit 1 over here, and your unit 2 would be on this swing high over here. All right. Hopefully that answered your question. So Herbert says, unit 1 position, once you've entered the trade, you have answered it when you were explaining. Thanks. Nice one, Herbert. You're welcome. All right. So now let's just look at, we've got 3 TAs in 3 minutes. Let's see if we can get it done. So Sean has asked, could you do a TA on Chili's? Seems like it broke a massive trend. Do you think it has completed a 5th wave? Thanks a bunch. So let's look at Chili's. Let's just share my screen. Let's just pull up. We do it on CoinMarketCap. We do it high level. Chili's. There you go. This was the one. All right. So I'm going to look at a high level on CoinMarketCap. It's going to get all the data first. So we're going to look at that. Yeah. So straight away, like with most cryptos at the moment, it's gone for a big correction. But what we've had is a recent surge. And currently, just at first glance, okay, it's not bigger than this one or this one yet. But it might be a new trend unfolding because of overbalance of price. So I believe the question you're asking is, so guys, it's coming up to 12. If you need to run, thank you for being here today. Hopefully you found that of value. Like really, we're going into a lot of detail today, but I've got around 3 or 4 questions that I'm going to go into over the TA. So if you need to disappear and enjoy your weekend, fantastic, do. But I'm going to answer these questions, but I think you'll find them valuable as well. So if you can hang around, do. So this over here, we've got this trend over here, which looks like a 5-wave structure. And this swing high has been smashed over here, which is great. So basically the question is this low likely to hold? Possibly, because this looks quite impulsive. Too early to say, but it looks quite impulsive. But the answer is, this is definitely a trend reversal. We just don't know if this is going to be a correction and a new low is going to be made, or if it's going to continue to the upside. I might just, in fact, I think it'll be useful. So I will do this. I'm just going to pull up Chili's on TradingView because it gives us more information. I think I've got an old chart from a while ago. I don't know if I have I? No, I haven't. I'm just going to make a new chart. So how I make new charts, by the way, I'll take any of my chart layouts. I'll just click make a copy. We'll just call it CHZ, and which is Chili's, and I click save. We'll open up a new chart. It will actually be the same one as before, and then I just change the ticker symbol just for those that are opening up new charts. If you ever got confused, or the easiest way of doing it, this is the easy way that I found. We just click on Solana, and then we just want Chili's, CHZ. We'll use the Binance data. That one should be fine. Yeah, that's fine. So why I wanted to pull it up onto TradingView is mainly because it tells us the weekly momentum, right? And the weekly momentum is clearly overbought. So what I want to just quickly do, just look at how well the weekly momentum serves us. Sometimes it's useless, and sometimes it's really, really helpful. You can see these highs marry up quite nicely, and they're quite tight. So we can use that information. And right now we're in this zone, so we know a weekly top is close, right? In terms of probability, consistency, and an edge. So we don't know for certain, but we're just going with the edge. Hence, we look at momentum. All right, so I wouldn't look to take long positions right now. If I'm, especially on trading chilies, is a bit different if you're, buy and hold strategy. And then let's just go to a daily chart. And what I want to look at initially is the pattern structure. Is there a pattern structure that helps us? And in my opinion, the answer is yes. What I see here is this initial move up, this sideways correction. We got this nice strong move up, a correction, and then a move up. So to me, just at first glance, it looks like this. Okay? So now we've also got bearish divergence. Go, what you get? What is bearish divergence? Bearish divergence basically means when the momentum crosses over, the blue line goes below the red, and the next time the blue line goes below the red is lower than the former. So in other words, it's pointing down, right? If you connected the two dots. But the price high and the next price high is moving up. That's what you call, they're moving in opposite directions. That's what you call divergence, right? And that's a sign of weakness. Sign of weakness. So it's an early signal to say, okay, chilies looks like it's topping out on a 5-wave structure, bearish divergence. So we should now anticipate a correction, but it's likely that this low will hold, and we have got a trend reversal on our hands, is what the odds say. So we're just in terms of casino type thinking. I'm just gonna do a couple of things here with chilies. If you don't mind, I'm gonna have a sip of my coffee just to clear my throat, because I think you'll find this helpful. So now we're going to do some analysis on chilies. I'm doing this because this is really, really clear-cut information. What we're going to do is measure wave 1 to wave 3, project it from what looks like a clear wave 4. End of wave 5s are typically 38.2 to 62%. And you can see, look at that, chilies tag this. So when you see this, you want to be on high alert in terms of taking profits, right? When you see this, especially with bearish divergence, this is where you'll tighten your stop loss. And the theme of today is stop loss, right? This is where you'll be moving your stop loss to a 1 bar low, 1 bar low, 1 bar low, and you would have got stopped out over here. It's how you squeeze as much profit out of the market as possible, right? And this is a really, really good example. So now what we're going to look at is, well, first of all, I will put a question mark here, because we want to remind ourselves that there's no way of knowing for sure. There's no 100% certainty that this correction has not been confirmed. Right, what will be the first indication that this, 5-way sequence has not been confirmed? What will be the first major indication is the price going below this low. Right? If the price goes below this low, that'll be the first strong indication. So what should we anticipate with chilies? Well, it looks almost identical to what we're seeing with Ethereum at the moment, but just almost like a week back. So what we do is, so I'm happy with that. There's a few other things we could do, like an external retracement. We would have done this. This would have been more valuable to us before the move to the downside. But again, you can see over here, most wave 5s finish in the external retracement range of this zone over here. So this is a very high probability top. Weekly momentum suggests it, and the bearish divergence and the bearish reversal on the daily chart. So there's like, this is how you will manage your trade to really squeeze out as much profit as you can. So now let's just do a summary of chilies. What should we anticipate next? Look at chilies. It's just buying and selling behavior. What we're looking at right now is human psychology, crowd psychology. How does it typically play out? Well, normally we're going to just look at simple retracements in price, simple retracements in time. And that gives us an indicative high probability feel of what we should wait for before we're going to more than likely see a continuation. So we're likely going to see a correction. So what I'll do is, first of all, retracement, low to high. If you've done the course, you know the numbers, right? It is minimum of 50% is most common, 62, and typical maximum is 78.6%, especially with projects like Chile, because their market cap will be much higher and much more established projects. You can get rid of these lines as well. These have served their purpose. You can also get rid of these lines. We'll keep the numbers, but just to keep the chart nice and clean. And then we'll just do a retracement. Same way as price, beginning of the 5-wave sequence and the end of the potential top, 38 to 62%. And you often see me just draw a box. And the reason I draw a box is just to make it more visual for you, so you can see what's likely to occur. Because often what would happen is some type of move to the downside would happen, and often people think this is the end of a correction, and it could be, but it's unlikely, because most corrections take 38.2% in time to complete as a minimum, and that just increases the odds. So we know sideways to down until the 19th of September. So we're talking about 3 weeks, and typical maximum is the 4th of October. So we're looking at the early stages of a correction. Now, it doesn't mean that's guaranteed, because there could be a continuation, but it's why we do the edge and wait for the edge. But the weekly momentum also suggests that as well, sideways to down for a few weeks. So there's a few confluence of events that's telling us the same thing. So what I would anticipate with Chilis is some type of initial impulsive move down. You know, it looks like we're on that track already. And it might be something like this, and then a move up, and then a move down. This is what I'm looking for time and time again. And when you spot these kind of patterns, and then double time frame momentum, pattern, price, and time, then we're looking to pounce and go long with higher probability, because the next part of the market will tend to be an extension of the prior part of the market. And again, it's normally 1.618 to 2.618. I'm just going to draw it. Let's just, again, I'm forecasting here. So this is, don't take this part too seriously, because we haven't got the information yet. But what I wanted to get across is why we look to trade end of wave 2s and the beginning of wave 3s is the next part of the market tends to be quite impulsive like this. I'm in detail mode today, man. I'm going into detail today. So let's hopefully you found that helpful. All right. Jag has asked, do you think ETH already bottomed? What is the invalidation price? Jag, actually, my YouTube content today is Ethereum. And I'm going to give you a summary version of what I did today. And you'll see the detailed in Ethereum on the YouTube content. If I can just find, sure I've got it open. Did I close it? Hold on. Just double checking that I have. Or maybe I did close it. All right, let me just open Ethereum. Gonna load charts. ETH. I want this one. All right, so what I did today in the Ethereum video, very similar to Chili's, actually. It's almost identical. Funny enough. What I said was the minimum time retracement has not been met. Listen, this is not. Actually, let me go to a 60-minute chart, because in the video, I had to differentiate between the two. What I said was we more than likely have only got the first leg down. And the main reason for thinking this is we haven't hit the minimum time retracement, which is the 4th of September, I believe it was. So this is likely just to be a wave A. Again, it could be the end of a correction, but it's unlikely. It's more than likely going to be the first wave A down. We can get a wave B and then another leg down. I'll do a detailed video on this on YouTube today, which might be in the group already. And if it's not, it'll be in the next hour or so. And then at 2 p.m. it gets posted on YouTube. Varun, Hydrogear, can you please see the link? Technical analysis, absolutely. Let's check out link. And I think that's the last one, I believe. Yeah, fabulous. Yeah, so let me just get this here. Okay, Chainlink. Let's just have a look at Chainlink on CoinMarketCap initially. Let's just see This is just those that don't know, it's the major oracle for crypto, which is basically taking real world data and putting it on the blockchain. All right, so we've had this big correction, right? Yeah, I mean, wow, it's a big correction, right? We know that it's moved down, and then it's like an ABC up, and then it's just been down since. And it's really looking at this part of the market. What does that look like? So let's just zoom into this part and see if there's any valuable information that we can deduce from this. Well, it looks quite corrective in nature because we've got overlapping waves, and this down here might be the final part of the correction. So yeah, there's no real clarity with Chainlink. Let's just do, as is the last one, we'll do the same that we did with Chili's. I'm just gonna open a new chart. Let's just copy this. Let's just do, I'm gonna do a new one, R15 link. We will add this maybe at some point because Chainlink's probably going to do quite well long term. Let's have a quick look. What I want to see with Chainlink is really the weekly and the daily momentum position, because that gives us a big clue, right? Because sometimes when the pattern's not clear, we can just look at the momentum, which helps us. So with Chainlink, the weekly momentum is bearish. Oh, this is this is my Chainlink analysis from a while ago, which we were anticipating. Let's just get rid of all the drawings. You know, so I can't remember the last time I did Chainlink. We will see it on YouTube. I think we pegged the top. You know, if I'm looking at this, and we said some type of A, B, C correction. It looks like an A, B, much deeper C is practically retesting the extreme lows down here, and it's gone below the 68.2%. Let me just delete all these lines. The main thing I wanted to look at on the weekly perspective is the momentum seems to line up quite nicely, and we should anticipate sideways to down, and this just looks like a correction. Right, this here looks like a correction, and we're probably going to break this low if we haven't already, more than likely over the coming weeks. Now let's just drop down to a daily chart to see if there's any valuable information from a pattern position. Yeah, so what I'm looking at over here is I just want to have a quick gander at this move. I want to look at the momentum position. Yeah, so what I'm concluding here is this part of the market, again, this looks corrective down, and this over here also looks corrective and then down. So we're betting on the market will be down, further shorts. Yeah, so any shorting opportunity, but I would anticipate, I would hold off if you're looking to long, as in buy Chainlink, until the weekly momentum. Just make sure I got the right one. Yeah, the weekly momentum is ideally oversold, and then look for, so it might be 2 or 3 weeks, and it might line up to Bitcoin as well. So be on high alert when Chainlink bottoms out or Bitcoin bottoms out, which might be a few more weeks, or likely high probability Chainlink may do something similar. All right, fabulous. All right, guys, I think we are done. We are done with Cook. That was a fantastic session today. Let me know in the Telegram group how you found that, actually, because I went into a lot more detail when it came to the stop losses, trade plan, and everything else. So hopefully you found that useful. I will do a replay. I'll get the replay back into the crypto Telegram group as well. So yeah, enjoy your weekend. Trend is your friend. Ride it until its end, until it reaches its bend. Capital exposure. Protect yourself. Remember, stop losses was the theme of today. Don't be concerned with losing 2%. Be concerned with protecting 98%. And that's our first priority, capital preservation. And then if the trend unfolds, unit 2, that's when we make our big money. And then we can add to the position also, which is something called compounding that we'll look into at a future date in more detail also. All right, guys, have a great weekend, and I will see you soon.